But Dr. Aurodeep Nandi, India economist at Nomura, and Asta Gurwani, India chief economist at Barclays, both are on the show with us. Asta, let me start off with you because most of the economists are believing it's going to be a 25 bips rate cut. Some do think it's going to be more aggressive also than that. Which camp are you in?
So thank you very much. And as I said, it is not a matter of whether they are cutting, but really by how much. Our base case remains that the MPC will cut by 25 basis points, but we do acknowledge that there is a very real chance for the RBI MPC to deliver a non-standard 35 basis point cut. And this is not going to be novel in any form or manner. RBI has resorted to non-standard moves in the previous cycles. So the base case is that they cut by 25 basis points, keep the stance unchanged at neutral, but we must not be surprised and should in fact be prepared if they go ahead and deliver a non-standard 35 basis point cut in today's policy.
Will it be a good idea to cut rates at a time when we don't know, Dr. Nandi, this one is coming your way, at a time when we don't know how inflation would actually pan out globally, because we know for sure that prices will go higher for steel, cement. So Mr. Nandi, is it a good idea to consider that, a rate cut, front load it or ignore it?
So I think, let's be clear what a central bank, especially RBI, does. It looks at inflation domestic. It looks at the domestic growth situation. Yes, there are global factors that impact both, and then it takes a call. That's one. Two, when you start a cycle, you've just delivered a 25 basis points cut, right? You've done a major pivot in terms of your whole policy trajectory. It's gone from being tight on liquidity and intervening on forex markets and keeping rates elevated to control inflation, to focusing on growth, pushing in massive amount of liquidity, and starting to reduce policy rates. So I think, given the fact that India has been in a cyclical slowdown for a while, there are domestic factors. I mean, we're focusing so much on Trump tariffs. There's actually, we have household balance sheet stress. We have private capex that has been relatively weak. So we have domestic factors that are also playing out in terms of a slowdown. So I think it sort of makes sense for the RBI to cut at this stage and continue with that easing cycle. So our base case is 25 basis points cut, and with neutral stance. The point that you mentioned about upside risk to inflation, I mean, the way we see it, if growth was strong, core inflation should have picked up, and it's not, right? We see, in fact, inflation remain below 4% throughout throughout 2025. Yes, there are upside risks, but in a situation where growth is tepid, we don't really see core inflation flaring up. Yes, there is an upside risk from the heat wave side of things if the Rabi crop output is disrupted, but really nothing to sort of make a 4% go to a 5% and make the RBI rethink its policies. Plus, let's not forget, crude oil prices have also come down sharply, so that kind of clears the mental runway, so to speak, for any RBI governor. So I think we are at a stage where we've turned on liquidity, we've turned on rates, so we are in an easing cycle. Let's start easing now. So and on the inflation side, actually, the decks are cleared. We're finally reaching at 4% target, and growth needs policy support. Even if you consider the Trump tariffs, the first hit that's going to come to the rest of the world, to the US, is going to be higher inflation first and then lower growth. Rest of the world, the first hit is going to come actually on the growth side. So policy needs to be countercyclical, and so we need easing at this point. So yeah, 25 basis points cut in 5 minutes time, and we have 100 basis points cumulatively in this cycle.
I'm just looking at the bank nifty right now, and what do we have there? Nothing happening. So Asta, do you expect Reserve Bank of India governor to acknowledge that, okay, tariff is something which would be a restrictive factor, or he can safely ignore it? Because when information is half-baked, no central bank can take any kind of a decision. They will only have to indicate and mention it. So on the tariff front, he has to speak something. What we need to understand is that what he could hint at.
Absolutely. Absolutely. So there is no way that anybody at the moment can ignore tariff, especially a policymaker of that stature. We do expect Governor Malhotra to refer to the risks to the economy that emanate from the tariffs, which will become a reality today. I don't think that there will be any policy response to it. And as you rightly said, any half-baked information is dangerous to deliver a policy response associated to that. But not acknowledging it and not making a part of policy statement, I do not think that's going to happen. I do expect him to talk about the uncertainty that has heightened versus the last time that he delivered the policy repo rate cut. If anything, keeping the stance as neutral will be in focus purely on account of this heightened uncertainty. So if you remember, the reason that they kept stance unchanged at neutral while delivering the first cut of the cycle was because they were worried about the heightened uncertainty globally. And the only thing that has happened between Feb 7th and today is that global uncertainty has heightened further. So the reason that they probably stick to a neutral stance is because of the uncertainty that comes with tariffs. There would be a mention of tariffs, the impact that can be likely on the economy. And also remember that alongside this policy, we'll get the monetary policy report of the RBI. And I do expect some of the staff estimates to keep a mention or make a mention on how these tariffs are going to impact the Indian economy.
So, Dr. Nandi, ultimately it will come down to that big word, liquidity. There is surplus liquidity in the system. Do you expect something on that front also? Because Reserve Bank of India has already done, which everybody was complaining about. Liquidity तो tight नहीं है.
So I don't think RBI needs to stand on occasion for liquidity. It can announce it whenever, wherever, which it has been doing so far. So of course, yes, there's a wide array of liquidity tools. I'm sure they can mention or announce something. But I think what's more important is guidance on liquidity. So sometimes it's words matter more than actions, because at this stage, if RBI governor were to come up and say, look, we are committed to a liquidity surplus, that we are looking to give X percent 1% of NDTL, we are planning to keep it at that level. I think that gives a lot of confidence then to market players, because the question is not just of, okay, liquidity has been put into the system, but what exactly is the RBI planning to do on liquidity? So I think the verbal sort of communication would be something that we are looking closely at in the policy meeting. Apart from that, everything else on the liquidity side is on the table. And as I said, policy or no policy, RBI can announce liquidity measures whenever it feels like it.
As the other aspect which we need to understand from Reserve Bank of India today is that will they lower the GDP forecast for coming quarters? Do you see that happening? Do you see them using that dreaded word which I don't want to hear, below 6%?
So currently their GDP growth forecast for financial year 26 stands at 6.7%. We ourselves downward revised our GDP growth number to 6.5% after the tariffs came in harsher than what we were expecting. I think the Reserve Bank of India will have to downward revise their CPI and growth estimates in this policy. Maybe they will talk about sensitivities, and maybe it's too early to come up with the number because we do not know how trade diversion can actually be favorable to India. But I do expect the RBI to cite downside risks to both their growth and inflation forecasts, and probably revise down the forecasts as well.
1 minute to go. I just want to mark what the markets are up to and how is it that we are going into the MPC outcome announcement. We're down about 0.5% right now. And again, it's a mark of resilience purely because of how the handover from the rest of the globe has been. Of course, it's IT which is taking it on the chin. But along with that, there's pharma also which is dragging lower. But maybe what we should mark right now is some of the rate sensitives. I want to see what banks are up to, what real estate is doing. Are you seeing any signs of a crack coming in there? HDFC Bank is absolutely flat as we speak. Kotak is flat. So show of resilience by at least select few banks. Axis is down only 0.5% within the futures. SBI a lot lower though. It's down over 1% as we speak right now. Bring up the rupee and the bond as well, because they too would be a little bit active, especially given the kind of, volatility that one has seen on the dollar index as well overnight. 86.58 is where we're currently at for the rupee right now, and that's quite a move that you've seen so far.